Memorial Day in the U.S. now, or for U.S. citizens and veterans overseas, as well as obviously in the continental and United States and territories, and the non-continental ones as well, like Hawaii. There you go. Anyway, so happy Memorial Day to my fellow Americans, wherever you are. And thanks to all our veterans for all the sacrifices and service they have given to make America a great and free country for as long as it has been. And you can say whatever you want about politics. I'm not going to get into it in this video. You know, you can debate whether or not the country has ever been great or whatever. I don't really care. That's not the purpose of this video. I will just say, once again, thanks to all the veterans who protected the values of the United States, mostly the Constitution, which upholds life, liberty, and justice, or rather life, liberty, and the pursuit of happiness, and justice and the American way, whatever that means. So thanks again to all our vets and all other people who sacrificed in times of war in the United States, because it's not only those obviously who are enlisted, it's their families, it's also other people who fought and fell or who were victimized by wars, right? For example, American news reporters, photojournalists, cameramen, etc., who have fallen in the line of duty while covering American wars overseas, or even at home during the Civil War, Independence War, etc. Are they not also due a nod of respect for their sacrifice during the wars that kept America free? I think they are. And also random people, citizens who fell. To me, Memorial Day is always a deep time of reflection to think about those that I knew, and of course the many, many more that I didn't, that gave their life in service to protect others. And I think it's incredibly noble and sad that people have to die in wars. It's terrible. It's incredibly noble on the part of those who give their lives for it. It's not necessarily noble on the part of those who send them to do the fighting and die. But that is the reality of the world. Old men send young men to die. And now, of course, they send young women too. Anyway, that was not the original purpose of this video. This video is really intended to say, okay, so the markets are closed today because of Memorial Day. How does that, if in any way, affect things like the trading of Bitcoin? Well, you can look at the fact that the market for Bitcoin never closes, right? And thousands and millions of other cryptos as well, right? Never closes. Now, yes, of course, there are some cryptos here and there, usually on a religious reason, where their founders, programmatically have built in things that don't allow the trading of a crypto on certain days of the week. There's all kinds of, there's been no shortage of such cryptos created in the last 15 years, right? That said, the overwhelming majority, more than 99.9999% of cryptos trading on markets today are open 24/7, and people trade them 24/7. At least nominally they can, right? The ones that are liquid see trading happening 24/7. And the reason for that is quite simple. It's convenient. There's always somebody looking for the next best deal. There's always somebody looking to buy and somebody looking to sell a certain thing. If it has demand and enough supply going around. Which is why crypto, trades relatively normally 7 days a week, 24 hours a day. Now, can you also say that, like on a regular weekend, you see less trading happening than, like during regular U.S. market trading hours? Yeah, but there's other markets around the world, right? There's European markets, Asian markets, African markets, South American markets. There's markets all over the world, right? It's not just North America. Now, of course, North America is where the heaviest amount of market trading activity happens. We know that, right? And then you can say, well, isn't it interesting that most of the big movements on a given day, certainly in the last number of years, 6-7 years, happens to have been during the times that the U.S. markets are trading? Yeah, you can say that. But can I also say that plenty of other great trades happen outside of U.S. market trading hours? Yeah, I can say that too. Plenty of great trades happen in those times too. And plenty of significant movements happen outside of those times too. Now, do those times increasingly or decreasingly happen during U.S. market hours? Well, it goes back and forth. It's not a one-size-fits-all answer. Depends on the asset and whether or not the asset is generally on the rise or plateauing or on decline in a broader sense, basically on higher time frames. But that does not affect a scalper's ability to scalp a trade on low time frames. Right now, of course, when you have less volatility, right? By that I mean standard deviation of returns, not what people call volatility of price. That's not a thing. Volatility is of the returns, right? So when you have less volatility, when you have less entropy, or less, entropic correlation for a move of significance, you're typically going to have smaller moves. You'll have a lot of minutes where the asset might not move at all. It might be 0%, right? 0.01%, 0.02%, up or down, right? So how do you use those times to take advantage of the available scalping? Well, the answer is you look for assets that are more volatile. There's always something that's a bit more volatile than what you're looking at, right? Probably. And that's one way to do it. The other way to do it is be patient, scalp wisely, maybe run trades a little bit longer, a little bit, not a lot. If you know how to use volatility and leverage together, then you might, want to put a small amount of leverage, but I would not recommend it. I really wouldn't. I know people can use it quite easily, and that's usually what leads to people getting wrecked. So again, I would not use the leverage. And if I were to use it, 2x, 3x, it would not go anywhere, above 5x. I wouldn't even go to 5x, really. And I know people will be, I can do like 20x trade or 30x trade, and double my profits if the asset moves, a few percent. Yeah, you could. You could also get completely wrecked if it moves a few percent the wrong way. And it happens all the time. That's why I'm saying I would definitely not do that. It's better to just, take your little wins and keep stacking them up. Again, if you're a real trader, that's what you got to do. You're not in it to just make one trade and boom, you're done. That's not how it works. Right? It works by scalping tons of little scalps and stacking them up. Now, do you have to do hundreds of trades in a day manually? You really don't. Can you? Sure. Will it drive you crazy after a while? Yes. Probably, because you're not a robot. Are there people who do it? Yeah, there are. Are there people who do it for years at a time doing it that way? Maybe, but it's really, really hard to manually run 400, 500, 800, 1,000 trades a day in a normal 6 to 8 hour trading session and not lose your mind a little. Because you're literally you're flipping trades constantly, like every 30 seconds, every minute. And, it's, so if even if you stack them 5 to 20 orders deep and just manage your stack, and even if you run them on an exchange where you pay basically no trading fees, right? There are exchanges that let you do that. Then, you're still going to have significant challenges in managing those trades because you're going to be losing some number of them and winning some number of them. And just to keep your head on straight is going to take a lot of effort in terms of tracking the P&L between the trades and everything else, making sure you're headed in the right direction every day. But, to each his own. There are people that do it. It's just not something that's usually very long term because it does burn people out eventually. So would I recommend trading that way for the long term? Definitely not. Would I recommend even trying it at all? To be honest, no, unless you just want to feel the experience. If anything, try it as a paper trader and see how it does for you. You will probably not be all that delighted with the experience, to be honest. My guess is you won't like the results. Maybe I'm wrong. Maybe you'll love the results. But from my own experience, having done lengthy periods of time, relatively lengthy periods of time, where I was trading many, many trades in a day, it's generally, not necessarily more profitable than just trading on the 1 minute time frame for, typically anywhere from 1 to 15 minutes, with an average of that being somewhere around 7 to 10 minutes for the trade. And that's usually sufficient for scalping, manually. Now, of course, if you happen to work at an HFT firm, you're laughing because you're thinking, well, that's hilarious because I run trades that last less than 0.2 seconds and I run millions of trades a second. Yes, that's because you run trades on a giant bot that is capable of running millions of trades per second. But the average retail trader does not have access to that. So obviously, any retail trader can't just do that. Right? Can't replicate those efforts. Right? If you are an HFT firm, by the way, please drop a like or a comment or a share. Tell your friends about the fact that there are, in fact, retail traders who know about volatility, entropy, probability, and statistics, and who would be delighted if you would join the party in alpha trading and discuss from your experience as a volatility trader. Maybe you trade entropy. Do you trade entropy at your HFT firm? We know that a bunch of them do. We know that many still don't. Question is, do you? If not, why not? Right? I'm curious. I'd love to know why a firm that has access to multi-million-dollar bots, staffed by thousands of people around the world, at this point in 2024, why would you not trade entropy? Right? It's not like you don't know it exists. Right? Now, of course, we probably have as good an entropy indicator as anybody, and I mean that, including the HFT firms. If you are an HFT firm, I would love to know what you think of our entropy indicator. If you think yours is better, I'd love to see what you're talking about. Because, we've been looking. We kind of have our eye on it. We know what's up. And haven't seen any great entropy indicators of note be whipped out and shown to the retail masses. Now, not that we expect you to show us all your secret sauce, but when people say that you're the smart money, if part of that being smart is obfuscating how you do things, well, then we think we have you beat in terms of ethics and process and values. And why? Well, because we share our knowledge with Joe Q Public. And you can try to block it all you want. You try to call your friends at YouTube, say, hey, you can't let these guys get the word out. But eventually the ice wall is going to break. Okay? You're not going to be able to keep this information contained forever. I don't know how it's going to happen. I don't really care. I just know it's going to happen. Someone out there is going to have a fire lit under their ass about sharing this, and they're going to have an audience for some reason. Who knows? They're going to have a big audience, and that big audience, they might even have a little one, but that little one's going to have enough people in it that have bigger and bigger or more and more audiences, and eventually it's going to get out, and nobody is going to be able to stop this information from getting out there. And when it does, well, there's just going to be more people who know how to trade properly, and that's not going to threaten the market, right? It's just going to help one person at a time become a better trader, which is our goal. We don't think, I don't think, even if the entire market was trading with this information, I don't think that would make it that most people wouldn't get wrecked still. Most people probably still would, because they don't take the right actions. Right? And they don't read the information correctly. Okay? And even if I made the most brain-dead, easy-to-use system, right, and tutorials and everything else, and I think they're already pretty simple, you're still going to have people who are going to take a long time to understand it and eventually give up and run back to the bad old ways. Right? So I don't know what the HFT firms, well, I do know what they're afraid of, but I find it funny that they remain this afraid after all this time because they're that greedy that they don't want the retail trader to get in on the action, not even the slightest amount. Right? They want absolutely zero involvement by retail traders. Right? Any amount is too much, as far as they're concerned. One is too much. Right? One trader doing this is too much. So imagine if there were thousands of us doing this, or tens of thousands, or hundreds of thousands, or even a million. A whole whopping tiny million out of the 100 million people, or 200 million people, or however many hundreds of million people trade stuff every day. But yeah, that's where we are. I find it hilarious. Anyway, happy trading.